Hi, today we will learn about some of the investment metrics. When we are planning to invest large amount of into the stock market, we need to pick the right stocks for the long run period. So, for that case, to pick the stock in a right manner, these investment metrics will help us a lot. First one is the price to earnings ratio. Next one is the price to book ratio, debt to equity ratio, free cash flow, price per earnings to growth ratio. First, we will look into the price to earnings ratio. We will cover the complete topics related to price to earnings ratio or these: how to calculate, advantages of PE ratio, and the possible ways, and what are the types of PE ratio, limitations, and where we can find PE ratio for the particular stock. Coming to the formula, this is the general basic formula. Current stock price to the earnings per share is called the PE ratio. How we will calculate the earnings per share? Earnings per share is nothing but net income or net profit earned by the company over the quarter or over the period by number of outstanding shares. And the main advantage of PE ratio is PE ratio will be having most value when we are comparing the stocks in the same sector, and we can track the company performance with the PE ratio over the time period, and we can compare the stock PE ratio with the index PE ratio if that stock is listed in the any index. And coming to the possible ways, based on the PE ratio formula, we have the price much more greater than the earnings, or earnings will be much more greater than the price. If the price is much more greater than the earnings, we can predict that we can tell that the stock is overvalued, or investors are expecting in future that stock will have the higher growth rate. If the earnings are much more than the price, stock price is relatively low its earnings. Coming to the types of PE ratio, there are people generally will use three ways to calculate this PE ratio. One is the forward PE, trailing PE, and people use earnings per share last 2 quarters and earnings per share in the future. It will be a generally predicted value. Coming to the forward PE, people will use estimated earnings per share or predicted value or expected one based on their observations and other data. It may produce the most of the times or sometimes incorrect or biased results if the actual earnings are announced by the company or different. Coming to the trailing PE, which is the most popular one and which consider the earnings per share over the last 4 quarters, which is nothing but 12 months. Coming to the limitations, the PE ratio has the certain limitations. Those are the earnings per share remains constant even if the stock is fluctuated. Stock is traded in every day in the market, but earnings per share announced by the company 3 months once or quarterly once. So if the stock fluctuates every day, the PE ratio will vary, and any major events drives the stock price significantly up or low. So in this case, the trailing PE has less reflective. Because of these limitations, the other ratios also come into consideration for the selection of a stock. And if the forward PE is greater than trailing PE, the earning per share going to decrease. If it is the vice versa, if it is the opposite, the earning per share going to increase. And mainly PE ratio will help to select a particular stock in the same sector over the period of time. And where we can find the PE ratio? We can find the PE ratio of any stock in the NSE website, and we have to type the stock name on the top search bar. We can find the stock PE as well as sector PE there. Thank you.